Coming up on Market to Market.
I want my checkoff dollars back.
The Weekly Journal of Rural America celebrates its 40th season on public television. We'll reminisce with a few memorable moments from the video vault and examine current price trends with a blue ribbon panel of experts. Next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, August 22 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. I want to thank everyone who joined us last week when we kicked off our 40th season before a live crowd at the Iowa State Fair. We've assembled another blue ribbon panel this week, and we'll have an expanded analysis segment in just a few minutes. Before we get to our experts, however, we want to reminisce a bit. Last week, we looked back at the farm crisis during the early years of the program. And this week, the Market to Market producers scoured the archives again to examine another critical period in rural America's, the 1990s.
No way! No sale! No way! No sale! No way! No way!
Bringing in more corporate capital is going to mean a very changed nature of rural communities. It's going to start meaning that the primary returns to agriculture, which have traditionally been in land ownership, start flowing away from the people that work on the farm.
Calling it a bin-busting year may just be an understatement this year. Government numbers are showing this season's harvest to be one of the best of all time.
They'd quit wasting their money trying to convince me and you that hog poopy don't stink and use their money for new technology, it would go a whole lot farther than the campaign that they're running now.
We are the feces and urine state, home of the sale from hell hysteria, and we have the feces and urine governor, Governor Jim Hunt.
We can have hog farming, chicken farming, dairy farming, and also a good environment.
And I deem anybody to declare any farm program that's being considered as welfare. My God, 90% of the people in this town think it's welfare now. We are perjuring farm programs when we do that.
We have to think, what are you going to do with us? In 1 month, the government cut the price $4. Why can't, in 2 weeks or in a month, put the price back up $4, like that?
Our basic formulated price is by statute to reflect the market. I did not snap my fingers and say, I don't like a $16 price, I want a $12 tomorrow, and push it down. I didn't do that. But you think I'm crazy? Would I want to do that to you? Of course not.
And we're not going to stand for it. One way or the other, we're going to defeat these people. One way or the other. We're going to make them sorry of the day they ever wheeled and dealed to come down here.
I want my checkoff dollars back.
Yeah!
I guess I can't really understand why these confinement buildings are still going up at an unprecedented rate. And basically, we are just producing too much pork.
I really think we ought to have a moratorium on these acquisitions and mergers because it's taken place at such a breathtaking pace. And I think that what's happening is that we're moving to monopoly and our family farmers can't get a break. We need to do something. And this moratorium on these large agribusiness mergers is the something that the Congress can do right now.
Next, the market-to-market report.
Grain futures prices were mixed this week, and despite modest rallies on Friday, both corn and wheat traded sideways. For the week, September wheat inched slightly higher, while the nearby corn contract moved fractionally lower. Strong foreign demand was friendly to old crop soybeans as the September contract improved by 64 cents. Nearby meal prices followed suit with a gain of $45 per ton. In the softs, cotton rallied this week as the December contract gained $1.38 per hundredweight. In the dairy market, September Class 3 milk gained nearly $1.40, as did the deferred contract. Over in livestock, the pullback from record highs continued as the October cattle contract lost 75 cents. Nearby feeders moved $4.20 lower, and the lean hog contract gave up more than $2. In the financials, the euro lost 14 basis points against the dollar. Crude oil declined by $1.46 per barrel. COMEX gold gave up $25 per ounce, and the Goldman Sachs Commodity Index shed more than 4 points to settle at 602.80. Here now to lend us their insight on these and other trends are four of our regular market analysts: Sue Martin, John Roach, Tom Fitzenmeyer, and Naomi Blue. Folks, thanks for joining us tonight. It's a special edition of Market to Market. Sue, let's start with you. We saw the wheat market continue to trade sideways. Have we put in the harvest low? Are we looking for a reason to bounce?
I think we are. The market seems to have more of a sideways approach. We broke through the 40-day moving average today, but we still came back and closed lower for the week, minimally. I think that there's concern in the wheat market. First off, you've got the French wheat. France started importing Lithuanian and Great Britain wheat here today and yesterday. And I think that it's been, I'm trying to think when the last time was they did it. It's been a very long time. And I think that what they're trying to do is blend off some of the wheat that they have for milling so that they can take care of orders they've had ahead of time. In the meantime, you've also had weather that was a little bit disadvantageous to the Canadian wheat crop as well as North Dakota, and concerns over vomitoxin is there. And they're talking about vomitoxin being the worst it's been in 9 years, with 2.2 parts per million. And so I think that you have that, and then you put the Ukrainian situation on top of it, and Ukrainians' production may drop about 9.4 million metric tons from what they originally thought. And I think that wheat has a reason to base here. And I think that when you look at the prices, I could see wheat going higher yet. I don't think we're done. I think wheat can probably move up. The hard part's going to be getting through 591. And I think if we can do that, then we'll ratchet Chicago wheat up over $6 to probably $6.20, $21, something like that. But the 589 to 591 area is a tough area.
Okay, all right. Now, John, as you take a look at this wheat market, Sue mentioned the Ukrainian wheat might not be there, and there was a couple of reports on that this week. For producers, are we into a sell signal at all on wheat for you?
No, we're not. The market bottomed. Came up and gave us a sell signal, and then went back down and retested bottoms, broke them out actually, and now we're bouncing back up again. So this is a basing action. I think Sue's exactly right. And I think that the market has been so complacent about the Russian invasion of Ukraine when in the spring it really stimulated the speculative buyers. This time the buyers don't seem to be as concerned, and I think the situation there looks just as difficult today as it ever looked in the spring. So I think there's not enough premium in for the difficulty that they're going to have getting that crop planted. I mean, they're moving into their planting season, and when you have those kinds of concerns, it's difficult to secure all the financing and get all the work done and duck from the bullets.
Certainly. And so that should lend perhaps a little better selling opportunity here in the near term? Would you guys anticipate it here in the next month or so?
I think so. I mean, I guess what I think is that the specs that are in the market, we still have a big spec position on the short side. According to the numbers I looked at today, it was about 10,000 contracts less than it was a week ago, but they're still short about 60,000 contracts. And that's a big spec short position that if it starts to trade through some of these uptrend lines or downtrend lines, then you're going to get more of that speculative short covering, I think. So I would look for a rally in the short term.
All right.
And Mike, I think too, wheat is building a W, could be building a W formation, very typical of a wheat market.
Okay. All right. Well, now let's jump down to the soybean market. Let's talk old crop soybeans to begin with. As we look at that 64 cent, almost 64 cent climb this week, Naomi, was it strictly export news that was driving that old crop soybean bump?
It helped. That was definitely a good reason for the speculators to come back in. But also, if you look at basis in the countryside, it continues to be strong. And stronger yet for remaining old crop until the harvest is able to become available. So we're starting to come to that window, though, that because the new crop will be here sooner than later, I wouldn't be surprised if we see maybe the September futures start to ease up a little bit, but mostly some sideways trading, especially for that new crop right now as we probe to find maybe a short-term temporary low, especially until we see if we have any signals of early frost, which could really throw things around here a little bit differently.
Now, and we did hear this week the Pro Farmer Tour was out and about in the countryside. Tom, their reports came in at 3.8 billion bushels, roughly close to USDA's number on soybeans. Has the market begun to put any sort of a weather premium on this new crop soybean market?
I don't know you'd say it's begun to put it in. I think they're just not taking it out. We've dropped obviously quite a bit from this spring on beans, but you know, the Pro Farmer number wasn't that much different. Actually, it was a little less than what the USDA has been using. They came up with a number that's barely a bushel above what's probably going to be an upward adjustment yield from last year. Does really anybody believe that you look around this crop, you look at the pod counts, you look at all that we're only a bushel per acre better than last year? It looks to me like there's a lot of downside in beans from this level, and I think Naomi's right. We're going to maintain a weather premium for a while, but you know the odds of ruining a bean crop from frost. I mean, if it hits your farm and you get nipped, there's obviously some problems, but ruining a crop probably isn't going to be a problem.
If you're waiting to make sales, don't hang your hat on an early frost.
400 to maybe 500 million bushels. So what if a few beans get nipped? I mean, in reality.
So would you be using this opportunity to make some sales in here?
Absolutely, I would.
Okay. All right. Sue, any other thoughts on the bean market?
Well, I think that one thing we have to look at is the ratio between beans, new crop beans and new crop corn continues to be abnormally wide. And I think there's another undertow here that's happening to the beans. And because if you look at new crop beans, they're going down like pushing water uphill. And 1016 is an objective, you know, from the gap of the 4th of July, and 1006 is a wave 4 count on the downside, which usually gives very good support. 985, 995, it might dip into that. But if you look at South American production this last year, they were touted to have a 91 to 93 million metric ton crop, and demand was ramped up for that. Instead, with weather, the worst drought in 50 years, or what many couldn't remember, they had a crop of 86.6 million metric tons. The USDA is maybe at 87. And so this year, they're talking around maybe 91 by Solaris, and Ag Rural's at 94 million metric tons. I think this bean-corn ratio is kind of sticking around, trying to enhance that South American production and getting lending for some of these farmers. With corn prices so cheap down there, corn is taking a back seat to the bean production. So because we're the only game in town right now, a lot of the South American production's been exported that's going to be. I mean, they still have some, but it's not the competition. It never really has been. And then you've got Argentina, who I still say, you know, the peso fell to a new record low against the dollar overnight. And that is another thing that's kind of creating that farmer in Brazil, or I mean Argentina, not to sell. Certainly. So all of those factors are playing a hand in here, but once they get a smell that the planting's going good in South America, things are going to look a little differently, I think.
Okay. Now, John, as we take a look at the demand side of the ledger here for the new crop soybean market, we did see China place another sizable order here this week. Does it look like Chinese demand is going to be able to grow along with these lower prices from last year?
Has so far. I mean, they've not backed off at all. Export sales on the new crop past last year's export sales at this point on a numerical basis. There still is a percentage of total expected sales, a little bit smaller yet, but the business is going brisk, even though we know that a month from now or 6 weeks from now, well, gosh, the price is almost $2 a bushel cheaper. So why are people buying in that face of that kind of an inversion other than there's solid demand and they're not being patient to wait until the bigger supplies and lower prices come?
If they could still make a profit at this level.
Well, they're still needing the supply.
Certainly.
And so you have to look at this demand and say, are we correct on the demand estimates for the new year, or are we under calculating what the demand looks like for this upcoming year? And so far, what we've been spending all of our time doing is focusing on the size of the U.S. crop, and it's big, or bigger. I mean, maybe not quite that big, but even bigger, or you just take your degree of big, and that's what it is, and the markets come down, and now we get a little nervous about bringing the crop home. There's also a gap between now and the time beans become available, and I believe that when beans become available, they won't be available. Farmers are not going to rush to sell beans at this price. They will drag their feet, they'll have their heels buried in the ground, and the buyer is going to be frustrated trying to get his hands on those beans.
So basis will probably respond positively should that situation arise.
As we saw this week.
You bet.
You know, Mike, I've got to add one thing in here. To put in perspective the amount of beans that China's going to import, the 74 million metric tons that the USDA is projecting they will over 2014-15, that's 4 cargoes a day that they have to be buying. So we're going to see them in the marketplace. And also, if you look at Brazil's weather, their weather, remember that horrendous drought that they had in January, February, and March, has come back, and it's still dry at an abnormally time when they ought to be wet, and especially in the Cerrado area. So I think there's some concerns there, and you know, we just need another month or so on the calendar, and then we're going to have a little bit of better picture, I think.
All right. Well, now let's jump up back to the corn market. Let's talk a little bit about that again. The Pro Farmer Tour being all the chat in the ag media this week. 14 billion bushels. Roughly on track with USDA numbers, 169 and change as the average national yield. Naomi, as you take a look at the, well, let's talk old crop corn. Let's jump backwards. There's still a lot of farmers, perhaps with some corn in the bin. What's your advice to those folks sitting there as we approach harvest time?
We'll likely see the market trade in about a 25-cent sideways trading pattern, and anytime you can get it to the higher end of that range, if you need to move some, it might be prudent to go ahead and do so. Looking down the road, though, going kind of back to the South American conversation, too, they're going to be planting 9% less corn acres in Brazil. And so that's going to actually then affect us here as we do our Fight for Acres in the fall and things like that. So I think there is some upside potential coming, not anything tremendous, though, by any means, but I think we have some upside potential. But between now and the September USDA report, there's not that much to talk about. And the Pro Farmer numbers, when you compare them historically to the September USDA reports, there's not that much of a big difference in between. So we still have this sideways trading platform that's most likely the only thing in town for a good month or so. But then hopefully we see the longer term demand situation pick up again, because there's just that demand out there, and it's cheap corn. It is cheap.
And now you mentioned a 25-cent trading range. Friday closed at 365 and a half. Would you look at 25? Are we in the middle of that range today, on the low end, on the high end?
We're more on the lower end yet.
So close to that 375 to 380 might be a good time to make some sales. All right, well, now let's jump into the new crop. Corn decision-making time. As we're there, we're on a rally. You know, farmers have been seeking a rally for a time. Tom Fitzenmeyer, do you make some sales in this rally, or do you hold out and see if it'll keep climbing?
Absolutely make sales. I mean, everybody's running around here saying, well, prices are cheap, demand's going to come roaring in here. Where? Exports, we've got the highest priced corn in the world, so export, how's that going to go up much? Ethanol's capped, so we're not going to go much above 5.1 billion bushel for that. Livestock number, obviously cattle and hog prices are high because the numbers aren't there, and while I understand that eventually that's going to turn around, it's going to be a while. So I just don't see enough demand swooping in here to gobble up a 1.8 to 2 billion bushel corn carryout.
John Roach, I mean, any other thoughts on the corn market?
I think it'll be like the 2 billion bushel carryout we had last year, that by the time we come around to today, it's not 2 billion bushels anymore. I mean, we had to push $5 plus corn out to everybody last year, and we had phenomenal increase in worldwide demand.
Yeah, but John, everybody's bins were empty a year ago. This year, everybody's bins are full. They bought everything they need. They were operating on a period where we didn't have anything, and they were kind of sweeping up the bins to get what it. This is a whole different situation this year, isn't it?
Well, I think it is, and I think initially that the demand we had last year right at harvest time, we probably won't see that for that reason. But I think as we look at this longer term, I think Naomi's exactly right, and that is that we're going to see acres down in South America. We're going to see U.S. acreage down. All the guys in the Dakotas that are getting these horrible cash bids at $3 and below, they're not going to plant corn there next year. Right. So corn acreage is going to be down around the world, in my opinion, next year. And I think with these kind of price levels, you can expect demand to be up. Normally, worldwide corn demand's up 2 to 4% per year. Let's just say it goes up 4%. We're going to not have a 2 billion bushel carryover a year from now.
Yeah, and the thing too with China to be thinking about is that internally their corn is more like $9 is what it costs, and our corn, if we sent it there, would be closer to $7. So they're just boycotting our corn right now because they need to get rid of the yucky corn that they have that's 3 years old in the bins, and so they're trying to get rid of it. So you know, you're right. We might not see something where just this demand pace just picks up tremendously and people are, you know, importing corn, but I think we see that slowly start to build and come back.
Now, the question here that farmers need to make sure they understand, and that is, although we're talking strong demand and some of these other things, we're not talking big prices.
Yes.
What we're talking about is solid demand, a solid kind of a market. And what the market has to do is it has to find a price level where we can transact record quantities of corn, wheat, and soybeans for this upcoming year. And all I'm saying is that at today's price level, I don't think that once we get through the harvest, you know, and we finally get things put away, I don't think we're going to be trading at these kind of price levels because of the demand.
All right, well now let's talk as we are talking about increasing demand, let's take a look at the livestock sector. Cattle on Feed report out today. Tom Fitzmeyer, how did it come in versus trade expectations?
Well, you know, we rallied pretty sharply on Friday in today in anticipation of that report, and it came out maybe a little bit not up to what the expectations were, so I'd guess it was maybe neutral to maybe a little weaker, probably.
Okay, probably see not a whole lot of response come Monday. If so, possibly downward.
They already had opening calls for 75 to 100 points lower.
Okay.
Right, yeah. So that already came over the news.
And now has the cash trade been transitioning along with the futures to be a little bit lower?
Well, I think, Mike, when you look at the cash and you look at what the beef market's doing, actually the cash market is too cheap. I mean, it should be like 160, 162. But then again, you look at the futures market, and here we are, discount again to the cash market, and we're running on October futures about $6 discount to where the cash market is today, and normally you should be $3.18 premium. So I look at that and I say to producers, how can you hedge that on the fat market? If you're going to hedge, do it only with put options and leave your top side open. Because I think by the end of the year, we're going to go for a basis change in here. But the key is demand. Here again, it's been a supply-oriented market. I guess on feeders, you'd call it demand because of the buying. But, you know, you look at the product and with product's kind of working its way down, which it should be. But you look at the hog market, and it's like dirt cheap compared. And you've got Canada with 1.3% more hogs right now, and they're looking at expanding. And you look at their beef industry, and well, they're sending heifers south. But I think that when we look at this market, and diets have been changing over the last 2-3 years, maybe longer, where they're shifting more towards poultry, away from red meats. And so, and you've got a poultry industry on the cusp of good expansion. It doesn't take long. So there's going to be competition. Right. That said, I think if I was a feeder cattle producer, I'd be hedging my feeder cattle. What have we seen on this break? People who have hedges on, dumping them. And I think that's a bad omen
Okay. And Naomi, you're nodding here right along. We've seen $4.20 move out of this feeder cattle market. What are your thoughts?
Just maybe just a period of just continued lower prices on the futures market because the speculators have stepped out yet. But we haven't seen any bottoming formation signal there. But Sue, everything that she said is right on as far as the demand goes and the longer term demand and things like that. So I'm hoping that this is more of a short-lived moving price lower that we've had here and that we see the market come back up, cash markets along with the futures price as well.
See it turn around.
Yeah.
Now, John Roach, as we get ready to head out, as we take a look at the hog market today, Sue mentioned dirt cheap, especially relative to the fat cattle market, and still falling. Does it look like we're going to bottom out?
I think we're not far from doing that. I think we're not far from bottoming both the cattle market and the hog market and staging some rebound. I mean, the futures market has really gotten itself ahead of the game here and because of the margin situation and the way the trading works there. And so I think that we're closer to a bottom and so I'm not interested in hedging here.
Not interested in hedging? Not interested in selling at these prices?
No.
Should start to see things turn around. All right. Well, folks, thank you so much. That wraps up our special edition of Market to Market, but we will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets exclusively at the Market to Market website. And be sure to join us next week when we'll learn how shifting U.S. food aid policy is affecting the agricultural sector. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.